Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea is to learn the Bloomberg terminal. With the dollar dynamics of the last 24 hours, I was visualizing in my head way too early in the morning a chart of gold back umpteen years. I want to walk through it. I think it's so important. The pros talk about standard deviation. The single best idea is to try to understand central limit theorem and the idea of percent change and how you gauge that looking at the past data. And one way we do this to keep it short is standard deviation. One standard deviation is no big deal. Two standard deviations is within the realm of, okay, it's going to happen. And three standard deviations is a general statement, indicates stress. If you take gold on a logarithmic y-axis back 20 years, 24 years, I think I did, and you plot it out, we are at two standard deviations right now with gold at 5,300. Where is three standard deviations? 7,400 is a quick estimate, not to the dollar, but in the vicinity of 7,400 is where I would suggest the recent 2 decades of gold indicates a stress. We talked about the stress today with Win Thin. He's at the Bank of Nassau. Dr. Thin, iconic out of Columbia, with all of his work over the years under Robert Mundell and in the academics of his Pacific Rim and Burma. Win Thin on this dollar moment.
Professor Mundell was a brilliant economist, and I think any international economist should read his works today. It's still, to me, groundbreaking. He introduced the whole idea of capital flows before capital flows actually...
Is Donald Trump aware of the capital flow risk when he says weak dollar?
Well, right now they're in this little sweet spot where they're getting, they're getting a weaker dollar without the spillover into other markets. But, we've seen time and time again in both developed and emerging markets, there are times when these moves get very disorderly and it's hard to get that genie back in the bottle.
Really well said. And of course, one way to look at this is again to go to the Bloomberg terminal. And I took dollar yen. Dollar yen has come in. It's a stronger yen. It's basically 162 down to 152, 153. Stronger yen, fine. Where does the yen become ever stronger? And there's any number of interpretations of this. But to my quick eyeball in math too early in the morning, we have a way to go to get the real strong yen stress. And I'm just making this real rough. It's like 10 below, from a 152 down to 142, 141, 140. Strong yen, weak dollar. Basically, we're not there. And that's the idea of if the genie's out of the bottle is maybe that where we're heading. The genie will be rubbed at the Fed today. It'll be an interesting day, to say the least. Constance Hunter of EIU on this moment for Jerome Powell.
We're seeing elevated goods prices, where goods prices had been zero to slightly negative for quite some time because, of course, we have increased productivity in that sector of the economy. We obviously have China exporting disinflation or deflation to the rest of the world by their extraordinary supply that they provide, and the tariffs upended that. So something that was not contributing to higher inflation was actually contributing to lower inflation has gone away.
Constance Hunter there on the separation between services and goods. Of course, we'll do our Fed coverage this afternoon. We lead with Torsten Slok, his essay today on productivity, important. On podcasts on Apple, on Spotify, on YouTube podcasts, it's single best idea.